justice and worker power and economic justice. And I was in a role there where I helped to support the development of worker-owned cooperatives, primarily Black-owned and women-owned worker cooperatives. And then for a short period of time, I worked in the social sector consulting firm, advising nonprofits and foundations on strategies to support economic development. And then I took a leap of faith to join the Boston Ujima Project as its fund manager in 2017 with a team of amazing people, many of whom are named in this book and who I'm going to speak more about in a bit. But today I'm I'm a part-time member of the deal team at TMV, which is an impact venture capital fund. And I run my own consulting firm with a few partners and associates where we specialize in advising impact funds. And the way I like to put that work is that we help economic gardeners build raised beds. I'm going to talk a little bit more about what we do, but I want to really sort of set the foundation first for this conversation. So I think Ujima's co-founder, Aaron Tanaka, put it really well when he said, when we engage the community around the central question of what investments are needed, and we engage in real conversation and data collection with hundreds of folks in Boston's working class communities of color, we're not only getting insight about what's needed, we're also getting a glimpse of what pent-up demand exists in that community and what businesses could best succeed in that community. So there's an economic rationale and a way in which this approach is self-reinforcing. But there's also an ethical reason for doing this work, which I know was my reason for wanting to join the Ujima team as its fund manager in 2017. And that came really from the central belief that the systemic issues that we were trying to address were best understood by folks living in the communities where those issues existed. Those folks, as I saw it, were the subject matter experts in what needed to be changed. And we weren't alone in that opinion. I and others on the Ujima Steering Committee, which included members of some of Boston's premier grassroots organizing groups like City Life Vita Urbana, investors like the Boston Impact Initiative, and aligned foundations like the Hyams Foundation and the Oak Foundation, all felt that the traditional paradigm of helicoptering into communities with solutions was broken. And the community members should be treated as subject matter experts and with as much respect as someone who's researched the issue academically. So that's what we're here to talk about this morning. Meg and Ben have both traveled around the country to pick up examples of what this can look like. And I'm glad we're all gonna have the chance to have a really robust conversation with folks who are here about how we could potentially implement sort of a new paradigm within philanthropy. So in the second half of this conversation, we're gonna open this up and I'm gonna ask folks to type in the chat and we'll make sure to get back to your questions and bring you in. But I wanna first start just by welcoming in Meg and Ben so we can have a bit of a conversation about the book. So Ben, I'll let you sort of introduce yourself briefly and then I'll pass it to Meg.
Thank you, Lucas, and really thank you for hosting. I know some folks know that the Boston Ujima Project was one of the first inspirations for this book, really an incredible organization, which we'll talk about. But anyway, I'm Ben Wrobel, based here in Washington, DC. I'm a director of communications at a nonprofit called Village Capital. I know most people on this call are familiar with broadly participatory grant making. You can think of Village Capital as a participatory grant maker, except we fund in early stage investments in early stage startups working on things like financial health and education and healthcare. So I set out about a year and a half ago to start to write a book about others in the field of impact investing who were trying to democratize decision making, and really quickly came across participatory grant making, and it's this incredible movement. But Meg and I kind of realized that there are a lot of people on the investing side, the lending or investing side, we're talking about bringing in the voices of people with lived experience, are not necessarily speaking to the people on the foundation, philanthropy, individual donor and giving side. So that's our book talks about both. This call is going to focus on sort of how foundations and folks in philanthropy can think about investing. And Meg, go ahead.
Thanks, Ben. I'm Meg Massey. I'm also a co-author of Letting Go, and I'm a writer and consultant, and I've been working in impact investing for the last 10 years, like Lucas, starting in the Obama administration, working on public-private partnerships, and then for organizations like the Urban Institute and the Global Steering Group for Impact Investment. And I've also written for Impact Alpha and a number of other publications. And one of the ways that the idea for this book really was born. Ben and began working on it. We connected at an impact investing conference in Amsterdam in the before times when international travel was still a thing. And we both had a number of experiences in that space and in others where we were seen as experts on things that we really had no lived experience with, because we looked the part, because we knew some of the jargon, and we were both questioning how this field could be democratized. So that was where the book was born, and it's now been a year and a half. We pre-orders are open. The book comes out next month, and both virtually and in person, as long as it was possible, we've been speaking. We spoke to more than 100 people around the world for this book, which was extraordinary, and we're just very excited to talk more about it with all of you.
Awesome. Well, that's a good place to sort of kick us off. So I think I'll try to frame it this way. I think a lot of folks think about impact investing and grant making as two sort of really different sides of the house, right? Where maybe participatory grant making is appropriate because it's for grants, but a participatory style couldn't necessarily be implemented with investing. And I want to talk a little bit about that, because you've chosen to write about both approaches in your book. So if either one of you want to sort of kick us off with just letting us know why you think it's appropriate to really think about both in this conversation about participatory decision making.
Yeah, I think it's absolutely appropriate for a couple of reasons. Number one, if you're a foundation, chances are you have an endowment. So you have money on one side of your house going to grants, and the rest of it is being invested somewhere. So the idea that, and in the United States, that you must give out 5% of your endowment annually in grants, but then that leaves 95% of the capital in your foundation's name that is sitting in an account somewhere, several accounts. And so the idea that you can separate those two, I mean, that's the whole theory behind impact investing, is that you really can't. It's still capital that's being put to work, and it can be put to work on behalf of your mission or your programs, which we can get into, or it can be in a lot of ways working against those things. There's another piece to this that I've talked about a lot, is that, you know, even if you're not a foundation, how you invest money still matters. If you have a 401k as an individual, if you're a retail investor, you're still talking about money, and money still affects people's lives, and how those decisions are made, how you think about them. The idea that we can separate our giving from the rest of the things that we do with our money, I think, is really dangerous, because it suggests that there's only one way to improve. There's only one type of capital that can improve the world, when in fact, whether you're investing in it or not, whether you're granting it out or not, I should say, it's still going somewhere, and we should all be thinking carefully about where it goes.
Yeah, I couldn't agree more. But Ben, do you have anything you want to share about that, about why you think it's important to bridge those two?
Yeah, no, I mean, I think that there's this really, I think it's a new conversation, you know, new in the past 10 years, past 5 years. And I think that probably of the 60 odd people on this call, there are probably, you know, a dozen odd different terms and ways to think and talk about this. And I don't think there's a really common terminology yet. I think people in philanthropy talk about it a certain way. People in impact investing talk about it another way. People who are just investors, you know, the Goldman Sachs types who say, I am now doing impact investing, they talk about it another way. And I think there's a lot of lack of clarity around, like, what is impact investing. I do sort of think that's, you know, that's almost a distracting conversation. I think we just sort of define it as just being intentional and thoughtful with whatever money you have that you're not giving away or spending.
Exactly.
Yeah, I think that's right. And I want to sort of unpack it a little bit. So I think within participatory grant making, there are some assumptions that those most impacted can understand how these grants should be administered is not as radical of a concept. But within investing, I think there's an assumption that it takes a certain amount of training to understand risk, right? Mm-hmm. To understand the risk of an investment, to understand how it might fail. And maybe the average person doesn't have that understanding. I think that that's part of like the tacit assumption that gets in the way of this work. A way that I think that can be addressed, and this is an idea from Helene Landemore, who's a professor at Yale, who's written about systems of democracy. She talks about this idea of really, it's this basic idea of empowering folks with a briefing packet. That if everyone in the room having a conversation had the same amount of information on an issue, they would come into the conversation with their own background. Sure, they would understand the issue from lived experience or academic experience, but they would have the same common set of facts to allow them to enter into a conversation about an issue. And I bring that up because that's what we had to do at Ujima. In order to have a vote on an investment, we had to present what are the risks inherent in this investment, what are the opportunities, what do we understand about the historic performance of this business. There needed to be an agreed upon sort of universe that we could all analyze and make sense of. I think that's really a prerequisite for doing this work. And that's, I think, what makes it, a lot of folks steer clear of it because it's tough to create that sort of shared common universe. I wanted to sort of open it up to you both, to Ben and to Meg, to think about just how foundations, large or small, can engage in participatory investing. Maybe you've seen some examples that are inspiring.
Yeah, there are a few examples. In the book, we talk about the 3 decision points that are part of both a grant making and impact investing process, and the 3 decision points at which you can bring in community voice. And even though investing in philanthropy and grant making rather are different in a lot of ways, there's a lot of similarities in those 3 decision points. In philanthropy, you have your mission or your theory of change, and investing, that's your investment thesis statement. So it's the idea that I believe that by doing X, it will result in Y. And that translates across both philanthropy and impact investing. And that's the point where, as a participatory grant maker, you might be, inviting community members to set your priorities or your criteria for considering grants. In investing, that can look like, okay, I know I want to do, work on, I want to invest in green technology in Kenya. I was on a call with someone from Nairobi, so that was the first thing that came to mind. But before I go any further than that, I'm going to start by talking to people in Kenya, talking to people who work in green tech in Kenya, talking to the communities I want to work with, and bringing them into that investment thesis setting process. The next step is building a pipeline, which in grant making has the allegory of, how are you sourcing your applications? How are you identifying organizations that you can fund? And in investing, that means, where are some business opportunities or early stage social enterprises where an investment can be made. And that's where, if you follow the financial news, you see a lot of people talking about, just how white and how male and straight and cis and able-bodied venture capital is. And that, as a result, it tends to be a lot of guys from Harvard and Stanford funding their friends or their friends' kids. And it just keeps the cycle going of, we might get a much better Uber, but we're not going to get anything that solves problems for people who aren't, white male Ivy League graduates. And that's where expanding the way of building your pipeline, the work that Arlen Hamilton is doing with Backstage Capital, to talk about, if you're not part of that group, you're part of the, billions of other people who don't fit into that very narrow fold. You look around at your life and you see, well, these are some, unmet needs that I have. This is what I see in my neighborhood, in my community. And how do I elevate those to the point of getting an investment? And that's where investors not only need to be open to those pitches, but they also need to put themselves in places where they're not only hearing from the same people over and over again, the same people in their networks. And the last piece is vetting and voting. So in participatory grant making, this would be the point at which the funding decision is actually being made, right? This is when you convene your panel, your committee. In the book, we profile a number of different examples. And on the investing side, this can look like forming an investment committee that includes people with lived experience. And this is where the due diligence piece comes in, which is really important because, yes, any investment is risky. That's kind of the point of investment, but how we define that risk is really important. If you're a lot of investors, much like grant makers, will turn to organizations that they funded before, or sectors that they funded before, because of their familiarity with that, right? It's a comfort zone thing, especially if you're feeling skittish for whatever reason because of the markets or economy. You're not necessarily exposing yourself to new ideas, and you could be missing incredible opportunities. And so that's the due diligence process doesn't have to just be the sort of what you were describing, Lucas, the jargony, very requiring a very specific set of learned knowledge. We can certainly do a better job of educating everyone with that financial literacy like you had to do with Ujima. But there's, more importantly, like, if you've spent your career trading on Wall Street, yes, you have a set of lived experience that'll be helpful with due diligence, but if you're someone who might be a customer of this potential investment, then you also have some lived experience that'll be very relevant to whether just how risky that investment is. And the beauty of Ujima's model is that it's people. I think you told us when you were interviewing for the book that if people in this neighborhood say we really want a grocery store that sells these items, you have to believe that if you provide that service, those people will then become paying customers of that service. And that's another way of de-risking. And on the investment committee point, and then I'll stop talking. On the investment committee point, one of the most interesting models that we came across in our research was the Olamina Fund, which was started in 2019 by the Candide Group, which is led by Morgan Simon, who's an impact investor that's done a lot on private prison divestment. And what Olamina Fund does is it invests in financial institutions that serve Black and Indigenous communities of color, and they have an investment committee that is made up of leaders of those institutions who are entirely people of color. And they have, that is 50% of the investment committee, I believe, and the other half is the staff of this investment firm, but they all have a vote in making the decision. And that they've, I believe, invested $40 million to date, but that's a really incredible way of de-risking an investment. And it's also a way that isn't super complicated of bringing in these other voices to a process that already exists.
I love that point. And I appreciate you sort of being that thoughtful and laying out all these different components that you need, right? There's this pipeline component, there's how you think about risk, which I think for folks who are outside of those investment committee decision-making conversations, a lot of folks would think that it's much more codified than it is, when in fact, there's a lot of qualitative assessment that goes into thinking about risk.
Exactly.
Ben, I wonder if there's any other examples that come to mind for you, whether folks you profiled in the book or just sort of more at the conceptual level and how you think about this question.
Yeah, no, I mean, just on the topic of risk, I was going to add that, I think very recently, maybe the past 3-4 years, ESG, environmental and sustainable government, I should know that, but there have been these screens for investment funds that have started to make sure that, if a foundation is investing through a major Wall Street bank, they're probably not investing in tobacco or in private prisons, but those are really limited. And I think a lot of foundations, I'd be curious if folks who work at foundations, if you all have someone on staff who's a capital allocator or some sort of position, an investment manager. I think a lot of foundations, if they're not thinking about where their money is going, you could be, there's a risk that you could be working on with one hand on trying to fix a certain problem with your mission, and then on the other hand, propping up the same extractive capitalist system that you might be working to improve. But yeah, as far as examples, I think it might be worth making a distinction between, there are some, if you're a foundation and you want to start doing program-related investments or mission-related investments, there are two sort of ways to broadly go about that. You could lend to and invest in organizations like the Boston Ujima Fund, which will then act as this intermediary that will then lend out to small businesses or affordable housing or startups, or you can start your own fund. And one of the examples that we profile, one of our favorite examples is the Gwen Vivier Fund. There's I'm sure a foundation many of you are familiar with called 1,000 Currents. It was founded by some former Peace Corps volunteers back in the 80s, and they had sort of seen international aid firsthand, and really, it made them sick, sort of the lack of engagement with on communities on the ground. So for 20 years, they were doing, really participatory style grant making, and they started to lend, or they started to give grants a lot to these small banks, for instance, in indigenous communities in Latin America that were lending, microfinance. And about 10 years ago, they realized that these banks were asking for loans instead of grants. If these banks are raising capital, they have a hard time raising money, right? If they're a very small bank in the middle of Mexico, they want to show other investors that they're getting loans, and they started to ask the 1,000 Currents, can you start lending to us instead of granting? And 1,000 Currents said sure, but they realized that they didn't want to just, they looked around at the market of how do we invest, and they just didn't like what they saw. So they created something called the Gwen Vivier Fund. I think Gwen Vivier means good life. And you can read about it in the book, but they had an incredibly collaborative co-design process for how to build this fund. I think it took like 3 years. The good news is they've done that work, and you can learn from it. But it culminated with a 3-day long weekend with 50 different people, half of whom were sort of activists, half of whom were some of their donors, some foundations. And ultimately they came up with this system where they make about eight loans a year. There's an advisory board that is half people with lived experience, half quote unquote professionals. And we say often in the book, the process is the point. And I think that the One Bevere Fund really it's just an example of how to sort of start to think about this kind of thing.
I love that point. And I'll just say quickly, when I was at Ujima, we were incredibly inspired and able to move much more quickly in our development process because of the work of the One Bevere Fund, because of the work of a group in Massachusetts called the Pioneer Valley Grows Fund, which was investing in farmers and folks in the food value chain, and because of pioneers like the Boston Impact Initiative, who were addressing racial justice work through their investing. So with each new proof point, it becomes more possible for more folks to figure out a way to adapt elements of this approach in what they do. And I think we found that we were able to sort of be a place where some foundations could test the waters by making PRI investments in our fund. It's sort of how we structured our capital stack, was to allow for non-accredited investors in the community to invest, accredited investors from many states, but then also we had a separate tranche for foundations, which was designed to accommodate PRIs. Because we needed that blend of capital with different sort of return expectations, different durations, in order to get to what we wanted, which was low-cost capital that we could lend out in the community. I want to kind of zoom out, and I'll just say for folks who are listening, in a moment we're going to open this up and have a much broader conversation, but I have one more question for you, Meg and Ben, which is just, we're talking about how do we share power more equitably within grant-making institutions, within investing. So this conversation, although we're focusing on these specific examples, we're talking about how do we share power? How do we transform elements of finance that are fundamentally either unjust, or where power is tightly controlled, or maybe decision-making is more technocratic than we would like, less democratic. So what's the long-term vision for transforming mainstream finance? What examples have you seen that you think are inspiring, things that maybe you touched on in the book, or maybe that you saw prior?
Sure,
Yeah, go ahead, Ben.
Thanks. I think Edgar Villanueva, who's really thoughtful on this topic, and he wrote a book called Decolonizing Wealth. He put out a sort of vision. He said, we would love to get to a world where 50% of both grant making and impact investing decisions are being made by people with lived experience of the problem. So if you want to get as big as you want to get, 50%, if we could get there in the next 10 years, that would be a vision I could get behind. As far as what an individual organization could do, and maybe Meg, you can talk about this, the Heron Foundation, how they, a lot of folks doing this are piloting, but you can talk maybe about how the Heron Foundation took the next step.
Yeah, the Heron Foundation is a pretty extraordinary example, and they made the announcement in May when we'd been working on the book for like 8 or 9 months, and we were like, oh wow, I guess we're gonna have to completely rewrite this chapter, because what they did is so incredible. The Heron Foundation, they're a US foundation, and they had reached 100% impact investing for their endowment, which is great. They actually reached that goal ahead of schedule, and they still kind of felt like, I think the way that their president described it was like, it was, kind of the air coming out of a balloon, like, well, we did that, now what? And they started rethinking of themselves as, ultimately we're here to serve, these communities, and we really shouldn't be the ones telling them what they need. We should be basically the pass-through for them to get the capital they need to make the changes that they want to see. So they announced in May that they're transitioning to a 100% community-led investment model for their endowment. And this has never been done before. And when we interviewed their leadership, they kind of described it as like, look, we're building the plane as we fly it, but they have like a multi-stage process where they're setting up these local committees within the communities that they're already working with, leaders that they've, leaders of like local community organizers, nonprofits, and they are beginning this process of like basically gradually transitioning their control over the money in an account to those committees, that they can start basically, like, Heron will sign off on their decisions. and you can read more about in the book. There's also Dana Becerra, the president, has been on, I know she spoke with the Beck Center for Social Impact over the summer about the process, and there's a really great webinar video that you can find online, and I will try to link it in the chat while we're doing Q&A. Oh, Ben's got it. But that's a really extraordinary move that they've made, and the fact that they've been very open about how it's going to take us a while to work this out, and anyone who's done participatory grant making knows that it's completely iterative, right? As Ben was saying, the process is the point, and so they were very frank about, it's going to be a while before we get this to where we want it to be, and then things will change, and we'll have to keep iterating. But that in of itself is what we want to be doing. We want to be in constant conversation with these communities. So I think that taking that mind shift that they described of thinking of themselves less as like, oh good, all of our money is going to, is mission aligned, it's going to things that we feel good about, but why are we still the ones saying, and you get this, and you get that, and you get this other thing? I think that's the real mindset shift. And it actually goes back to something you were saying, Lucas, about the unaccredited investor piece, which is something that I get really excited about. So I'm going to take 2 minutes to talk about it. Unaccredited investors. So the reason why we think of investors as being these like rich, far away people is because for the last almost 100 years, the system was literally designed, at least in the United States, to be that way. After the stock market crash in 1929 and the Great Depression, Congress said, we want to prevent this from happening again. What's the best way to do that? I know people who don't make enough money shouldn't be able to invest because they will get swindled. That was the logic. We're going to protect people who don't have money from themselves because obviously they're not smart enough to invest wisely. And they made other changes around that, but that was the central thing. They thought they were doing the right thing. They thought they were protecting people, but what they did was set up a system where wealth equaled wisdom. And I'm sure everyone on this call can think of someone who makes less than $80,000 a year or $50,000 a year who is like super smart and knows what they're doing, and a very dumb rich person. I think we all smart or dumb has nothing to do with how much money you have. And the Obama administration, I think it was the last couple of years of the Obama administration, that law finally got changed. And so now there's a much, much lower, either it got rid of the income threshold altogether or it just lowered it significantly so that more people were eligible for investments. And you're responsible for your destiny. You can still lose money on an investment because that's investing, but there's no longer this baked in assumption that in order to make money, you have to already have money. And so the fact that trap is, we're starting to get out of that trap is really exciting. I love that story because it's just it so perfectly encapsulates a lot of the power dynamics that we're talking about. A lot of the stuff that we're saying is bad is also unintentional. People think they're doing the right thing. They think they're being helpful or protective, but it actually is having the opposite effect. And that's what we need to start really interrogating and confronting within ourselves and addressing.
I think that's really a helpful place to sort of open it up for Q&A, unless Ben, there's anything else you'd like to share. Because what I hear in what you just said is that if we can interrogate sort of this question about protection and where it crosses the line to paternalism, that we can understand some of these assumptions that are baked into how grants are deployed and how investments are made. Ben, anything you want to share on that before we open it up?
No, I thought that made sense. I just, maybe before we get into the weeds a bit, one last point that both Buen Vivier Fund and the Heron Foundation, they are both agnostic when it comes to whether, so when the Buen Vivier Fund, it's a fund, when the Heron Foundation creates their new process, in both cases, they're giving both grants and loans, depending on what the organization needs. In some cases, they'll give $30,000 a grant, $45,000 in loan. And I'd love to learn more about that and how that works. But there is information out there about that. And I just think it's important to note that there's not this sort of firewall between the two sides.
I'll lift up two quick things before we open it up as just examples that folks can learn more about. So one is that when we were at Ujima, and this is true of many funds, you raise the fund quicker than you plan to deploy it, right? You hope to raise in 2-3 years, you might deploy over 5. What that then makes true is that you have this amount of money that isn't being put into small business investments that is sitting within your fund. And during that time, we thought it would be right to actually engage our community around where we should put that money before it actually gets deployed. So we knew ultimately we were going to have the community vote on each investment we made for a small business. But while it sits there, should it be sitting in a checking account at a certain bank, or should it be sitting in other sort of products? And I bring that up because I think this is the kind of conversation that Heron is going to need to have with its small local committees, is saying, when we look at these options that are suitable for our endowment, things like other local loan funds, but also things like certificates of deposit, certain money market accounts, certain types of investments that are a little bit sort of lower risk, that have a certain return profile. Even those, it's possible to talk about screening them from an ethics perspective and having a conversation about which products are a fit. It's not easy, but it's possible. And it goes back to the point I was trying to make about framing, where I think, and I'll drop the link in the chat, but I think Helene Landimore's done a lot of thinking about how to frame conversations in a way where you can bring folks in regardless of how much they know. Some folks might know a lot, some folks won't know a little. So I want to open it up to folks who have joined us. I really appreciate you coming in. I see some folks that I know, and I just encourage you to either type in the chat or raise your hand if you have a question that you'd like to ask Ben and Meg. Or I'll also say, if not a question, if you're thinking a little bit about how this work might impact the work that you do, we're also open to hear you sort of think that through with us. I see that we have a few comments coming in.
Yeah. Meg, you should take this one on. I know, Meg, when we first started talking about this book, Meg was thinking about a book about crowdfunding. So Meg, I know you're big on this topic. Tanae's question just now.
Yeah, Tanae, great to have you on here. Everyone should look up what Tanae's doing with FreeCap. It's awesome. So in terms of the viable option for community ownership around VC, I agree. Like what Arlen Hamilton did, for those of you who aren't familiar, Arlen Hamilton, who's the founder of Backstage Capital, she's extraordinary. There's a book about all the work she's done trying to bring diversity to Silicon Valley. She had initially had investors like Mark Cuban in Backstage Capital, and then she opened it up on an equity crowdfunding platform called Republic. And that's one of several platforms where startups can raise money from their community. So you're raising, I think the minimum investment in most of them is on most of these platforms like WeFunder and Republic it's something like $100, right? So it's a lot more accessible than something like a minimum $10,000 check size, which for most of us is simply not realistic. I think that equity crowdfunding is a sort of is a really viable alternative to like the first pre-seed and seed stage venture capital. I think once you get beyond that, it gets trickier, and that's where we talk a little bit about in the book, where VC funds should be looking at how they're bringing lived experience into their due diligence process, into whatever investment committee they do form, or just how they're sourcing deals. I think we saw, to be frank, we saw fewer examples of that, and it's widely documented how much of a problem this is in Silicon Valley. So I don't want to sit here and say it's not going to be an uphill battle, but there's nothing other than mindset preventing it from happening. I would also really encourage folks to look into equity crowdfunding if that's something that you're interested in on the venture capital side. We write in the book about how there's an equity crowdfunding platform called Fundana that is specifically for cannabis entrepreneurs, and it's been, because they're still in the United States, I'm not quite sure how it works in the rest of the world, I apologize, but in the United States, at least, because of the patchwork of state laws around marijuana legalization, it can be really hard for those businesses to access capital regardless. And then you add in the additional barriers on founders of color, and it gets really tricky. And equity crowdfunding has acted as a really good, it's made a lot of businesses possible that might not have been possible without that type of platform. So that's, so I think there's a lot of different ways that at that early stage you can bring communities in, and at the later stage, I think it's just continuing to cheerlead people like Arlen Hamilton, who are making people confront the fact that they all look like Mark Zuckerberg.
Yeah, no, I mean, just essentially, that the cannabis industry is a good example of all the ways that, race and demographics affects people's ability to access capital. It's not just as simple as getting a bank loan. I mean, cannabis is going to be an enormous industry in the United States. And we talk so much about diversity in tech, which is, of course, big, but right now, just the vast majority of cannabis companies are owned by white people. And this is not going to change anytime soon unless there are really creative solutions. And 10 years down the road, we're talking about billions and billions of dollars in wealth, contributing to this, the idea that by 2053, African Americans will have net $0 in wealth. So it's just an interesting example.
I want to speak to something that just came in the chat, and then we have a number of questions that we're going to get to. So one came in from Diana Samarasan about how we manage public money, and I want to drop a link in here that I think is really exciting, an exciting example of sort of that piece. I think you're exactly right by pointing to that. I think part of our hope, many of us, the organizers behind Ujima, of which I was just one, there was a broad team there, we thought about sort of the best case scenario for the impact we wanted to have in the city of Boston was that folks would have a greater sense of agency with how they interacted with all institutions in their lives. So when walking into a hospital, when walking into a university, when walking into a bank, that they would think, well, this is my money, this is my life, this is my outcome, and I should have a say in this. I shouldn't be sort of shuffled through this system. We saw that happen when we partnered up with a group of grassroots organizations in Boston and demanded that pension fund dollars be rerouted to ESG screened securities and to community banks. And we were able to shift about $250 million of the city's $7.2 billion towards those ends. So we were able to sort of move the conversation from just Ujima to how the city's pension dollars were managed. I think that's possible, and we proved that it is, but only with a lot of coalition building. It wasn't just us. We moved in concert with other grassroots orgs. So I want to acknowledge some other questions that have come in the chat and throw these to you both. Unless, Meg, is there anything you're dying to say on that point about city pension funds? Otherwise, I'll move to another question.
Not on city pension funds, but just on sort of the public policy angle more broadly, because especially early on in the book, we got asked a lot like, well, you guys are just making the same argument as Nanjir Haradas did in Winners Take All. And we see ourselves as yes-anding that argument. Like, yes, wealth is concentrated highly at the top, and that is a huge problem. And ultimately, the only solution for that is higher taxes and better public services. Like, we're not questioning that assessment at all. What we are saying is that so long as philanthropy and impact investing exist, they need to be more equitable. As long as those are sources of capital that exist of the world in the world, this is what they need to do. I think I said to Ben at one point, like, we could live in an Elizabeth Warren fever dream and we would still need to have more, people part of these decisions about capital that isn't public. So that's one thing I would add.
Yeah, I would totally agree. Well, this is a question, just sort of think back to when we were sitting in a cafe first talking about this, maybe 2 years ago. What things surprised you? How were elements of your initial thesis disproved or challenged in the research that you did?
One thing that, let me maybe come back to that, but another question was what brought you, what brought you joy about the process? And I think learning about all the people who are sort of activists, financial activists is a term we've seen used more and more, people who are fighting really in some cases contentiously, right, when appropriate, to change people's minds about this. I know several people on this call, I see Diana, Jen, are part of the Participatory Grantmaking Community, which actually evolved out of the Participatory Grantmaking Collaborative. And it's this group of fund managers, participatory grantmaking practitioners, mostly women, who are, in the past year, this group has grown from a small core to more than 300 people. And we'll be launching a website soon, and share more about that with folks who signed up for this call. But there's just really intentional conversations happening about how do we constructively share these ideas. And with all the people in the network, there's just so much potential. Meg and I both come from activist backgrounds, NAACP and urban and all and whatnot, and it's rare to see this sort of the activist space that's usually the ones getting funded, and then the financial space, the funders. It's this really interesting intermixing that has just been really, really great to see.
It actually reminds me of Transform Finance, right? An organization that's trying to bring in more activists to be sort of armed with the lexicon and understanding of this financial space so that they can agitate and bring that activism sort of perspective towards these kind of staid institutions. Meg, I think you're about to jump in on Ben's point. Do you want to speak to that?
Yeah, well, first I would say definitely, we haven't talked about Transform Finance yet, but we should have mentioned them earlier. Like, they're a great organization, and I would recommend them as a starting point if you're a grant maker on this call and you're just starting to think about this. Them, and also Mission Investors Exchange is another place that I would, point to as a good starting point. But in terms of what surprised, the most surprising part of the process for me, agree with what Ben said, but I think, one thing that I think we were both wrestling with, especially early on in this process, was like, look, we're two white people who grew up in wealthy suburbs. Like, why are we writing this book? There was a little bit of like that meta self, are we really the right people to be speaking to this issue? And what we found over time was that the book increasingly became a platform for other people's voices, that we were, it made us really think carefully about how we were telling people's stories, how we were framing these issues, and to really, basically, we had to let go in a lot of ways of, our preconceived notions that we have, and really just let the story speak for itself. And I think that going through that process, it was challenging, but it was so important. And it was, frankly, and especially in the midst of the pandemic, and, the sort of, finally this reckoning among white people that there's a huge problem, racism is a huge problem. I think that it was having that experience at the same time was really, really powerful. And I think made this book a lot more, I don't know what the right word is, but I feel very, very grateful that was part of the process. And we want to continue doing that as we work to share the book with people, that, this isn't about Ben and me, this is about everyone who's doing this work, and how do we be intentional about taking that step back.
If I could just add one, I love that point, Meg. If I could just add one sort of piece to that, because that was part of the learning I went through at Ujima, is just when you're in a position of sort of decision-making authority, there's a compulsion to rush to action, to rush to a decision. That's what you've been put in that position to do. But if you can instead say, in this moment, I'm not actually sure of what the best decision is, and I want to take the opportunity to sort of practice humility and seek broader consensus, seek a broader knowledge pool, that's the opportunity that we're highlighting as I see it. We're saying, in those moments when you're not sure, have you broadened the room enough so that you can get the best sort of group opinion in the room? So there's some specific questions that have come in. One is about how to house unaccredited individual investors within group funds. I'll just say at Ujima, we worked with a terrific law firm, Morgan Lewis, who helped us navigate that. It's a specific state-by-state process, letting states know you're going to raise from unaccredited investors. There's also some other questions, like I mentioned the one about sort of what surprised you both most. Are there other issues or avenues that you could have gone down that you didn't get to go down in this particular book, the things that came up that you want to maybe pursue in the future? So I'll sort of throw both of those to both of you.
Sure, and I saw someone pointed out in the chat that participatory budgeting is another big topic, and I should say participatory democracy. And again, there's so many of the same people. I know, at least in Boston, Lucas, so many of the same people are pushing participatory budgeting as they're pushing, Ujima Fund. But essentially, the book is about decision-making in philanthropy, decision-making in impact investing. There's this other really big topic about decision-making in government, which we just don't talk about because it has been several other books, right? Many books have been written on this, but we're working on an afterword right now where there's this really interesting statistic that back in 2016, sorry to bring this guy up, but back in 2016, when there were 3 Republican candidates in the 2016 primary, Donald Trump had narrowed down to 3 people, and at that point, Donald Trump was significantly over-indexing with voters who had zero engagement with any clubs, affiliations, any civic engagement, right? So the folks who were the least engaged with their communities, were the least engaged with civic life, were the most amenable to this sort of authoritarian leader. And I think that that's just something you see in a lot of countries, in places where there is just lack of trust, lack of legitimacy in government. It often comes from people having really poor experiences with, whatever the top of the funnel is for them, whether it's the healthcare system or whether it's trying to sign up for, the DMV. And there's this there's this scholarship of deliberative democracy and participatory democracy. Participatory budgeting is just one example, where folks have, in Seattle, there's going to be $30 million of next year's budget that's decided by local folks. But there's also this really interesting concept called policy juries, and they act a lot like trial juries. In Ireland, they did one around the question of should abortion be illegal, and it's a super hot button topic, as you might imagine, in a Catholic country. But they essentially dialed up 99 random Irish citizens. They brought them together over the course of a year for 12, 10-hour-long sessions. Folks talked to each other. They heard from people with lived experience. They heard from experts. It was all very structured. And at the end, they actually came to an agreement. And there's more to learn there, but there are these very tactical tools and mechanisms and vehicles and infrastructure for participatory democracy that there's a lot to learn about and a lot to write about. And we talk about it a bit in the book.
And I would add, just because I saw someone in the chat asking about social impact bonds, which are another, that for those who aren't familiar, that's when an investor provides the upfront capital to scale a social program and they're paid back by the government. So that does involve taxpayer dollars. And that was actually when I was at the Obama administration, that was my introduction to impact investing, was working on social impact bonds with the federal government. And the way the sort of participatory angle to those would be around setting the outcome metrics, because hitting certain outcome thresholds determines whether or not the investors get repaid by the government. And if the community is not part of that conversation, that's a huge problem, and they should be. So I would say if that's an area where you're working, then that is really, I can't stress enough how important it is that is where you need people with lived experience defining success, because otherwise you're going to end up with some very perverse incentives for something that can be a great tool when it's very clear that there are certain, when it's very clear that there's a tangible problem that can be measured, that can be solved.
I love that point, Meg, about incentives and about how they get set, and how these systems aren't necessarily broken. They're functioning as they should. They're just rewarding incentives that were designed by a sort of smaller set of folks in some cases. I really appreciate that point. I want to make sure that I bring in other comments that came in the chat. While I'm scanning this, if you still have a question, feel free to just type it in now. We have about 5 more minutes. So I want to make sure that we bring everyone in here. Someone's asking if you're, Jen, thank you for pointing that out, that if folks are interested in doing participatory grant making, that they should reach out and try to join this community. Let's see.
I do see one question here about examples of the impact that these participatory funds are having. I will put a bit of a plug in here for Village Capital, where I work. We have a fund, it's Build Cap Investments. So we're a nonprofit, but we have an affiliated fund. And essentially our process in just 30 seconds is we get groups of entrepreneurs in a specific part of the world working on a specific problem. So recently we had a program around with Habitat for Humanity, where it was entrepreneurs working on shelter tech. So anything around helping folks get clean food, clean water, shelter. And a lot of nonprofits do this work, but we're focused on tech companies, right? So we bring together 12 of these startups. They get to know each other. They give each other feedback on their businesses. They're all very early stage. And at the very end of the process, there's this long voting process, and they collectively select 2 of their peers to receive money that we put up and Habitat for Humanity put up. So we've done that 70 times. We've done that in different parts of the world. There's always 12 startups. There's always 2 winners at the end, selected by the group. And our portfolio, again, this is us making 0 decisions. Our portfolio for that process is 40% female, or I believe it's 44% at this point. Normally, Meg, what's the number for how many women, or how much funding do women-led startups get? I always forget the latest
Less than 3%, Ben.
Less than 3%. I think it hit a record high.
Even worse for women
year.
of color, but on balance, less than 3%.
It hit a record high of 2.9% last year, and then with the pandemic, it went down to 2.3%. And again, 40%. It's when you change the process, it just changes the results.
No, when you change those incentives, you change the process. And to Ben's point, The other example that I'll plug is SheEO. They started in Canada several years ago, and they have sort of a variation on the peer on the peer selection model, where they build a loan fund through retail investment. So I think it's $1,000 a year. They're active in Canada, the U.S., and I believe Europe and Australia. I'd have to double check that, but they it's all women and non-binary people who contribute that $1,000 a year. They receive applications from women and non-binary led startups that are also early stage, seed stage, and they vote on a group of finalists, and then those finalists have their own do a peer selection model. And to date, they are given a no interest loan from that fund, and that loan must be repaid within 5 years. And they currently have a 100% payback rate. So that so they're clearly making some good bets. One of them got endorsed by, it was a device that got endorsed by Salma Hayek to help disabled people walk. I called the Linker, and they now, I want to say that they now are they're like a multi-million-dollar company now. It's they've made some really cool bets. So that would be the other place I'd plug. In terms of other examples, I mean, with things like Heron and some of those institutional examples, anecdotally, we're hearing really good things, but it's still too early to give the numbers that Ben gave for Village Capital. Village Capital's been around for 10 years, so I think if you're looking for data, that's going to be something that takes a while to pull together. But anecdotally, at least, we're hearing we hear a lot of, even though it can be tricky, like with participatory grant making to set up at the start, what we're hearing coming out of that is really positive.
Well, I want to, go ahead, Ben, and then I'll move us to sort of close.
No, Hannah and Ali, I saw any tips for small community foundations in the UK. Maybe we can, also we'll share both of our emails, and we can all follow up over email. But one thing just to point out, if you're really just on the foundation side, that look around in your community for any incubators or accelerators. Folks have probably heard of Y Combinator and Techstars, maybe not. These are, they take early stage startups and they spin them up. You've seen the show Silicon Valley, but there are some that are very corporatized, some that are very focused on, what's the next e-commerce company, how can we make a quick buck? But there's an increasing amount, often funded by philanthropy and partnering with philanthropy, that are very community focused, community oriented, often focused on equity or people of color or women. So look around in your specific community and see if there's anyone you can partner with to start to learn about investing.
And on that point, I'll also say that there's room to expand. I fully agree with that point, and there's room to expand beyond those networks. I think at Ujima, part of our success was due to the fact that we partnered with grassroots organizations that were focused on environmental justice, housing justice, a whole range of issues where we saw intersection with the conversation we wanted to have around economic development, right? Because you can't have a conversation about environmental justice in Roxbury without also thinking about how the neighborhood's going to change with regards to what new developments might come in, what new businesses might come in. So we were able to find that sort of interstitial point and have a conversation that mattered to all of those different groups who had built their own bases. And I mention that because I think there are folks today who might feel alienated by some elements of this conversation about finance who are very engaged in conversations about community development, and we need their voices in the room. Meg, Ben, I want to open it up and ask if you can both sort of give closing comments, and thank you for sharing your emails. I'll also drop mine in. If folks would like to talk more about examples of this work that we're supporting at Sankofa Group, happy to do that. But Ben, Meg, would love to hear your final thoughts.
Yeah, I mean, there was an article in the New York Times, I think today, about, I'll see if I can pull it up, but it was about basically the past year, there were a lot of things that were tried in business and government that people had said for years, you can never do that, it'll never work, everything will break, right? There were investment banks that just said, hey, you can, we're going to put a pause on loans. There were government programs where they just handed out money, and things didn't break. In fact, a lot of these ideas that were considered radical worked quite well. I do think that we're at a moment where these conversations are really are really relevant, and 3 years from now, they might not be, right? So I think there's a real urgency to continue these conversations and to act with speed on this stuff. And I just wanted to put out there for folks who are in the PGM community, I'm going to be putting out a test balloon about whether folks are interested in a sort of small working group around investing for foundation folks. So if anyone is interested in that, shoot me an email and I'll follow up on our Slack. And if you haven't joined the group, I'd encourage folks to join.
Yeah. Yeah, as Ben said, we want to keep the conversation going, especially for foundations that are thinking about this for their endowment. I guess my final thought would be that, you know, this is just the beginning of a conversation, right? It's, you know, this, as Lucas was saying earlier, this is ultimately about sharing and shifting power. And I think that whether you're talking about grant making, whether you're talking about investing, this is it's truly about mindset. One of the kind of catalyzing things for me for writing this book was being invited to like a cocktail reception with a bunch of investors and having someone ask me like, so tell me how to invest in women in India. And I'm thinking like, I like being sort of like shocked by that question, because like, yeah, I've read a lot about impact I've worked in impact investing for a long time. I've been to India, but like just feeling that gap between, oh, you're asking me this because I'm, wearing a suit in a cocktail room and I'm a white woman, and the person you should be asking is the woman in India who started a business. And that was really kind of a click moment for me. And ever since then, I've had a lot more of those moments, and I'm sure there are a lot of people on this call who've had a similar experience. And I would just really encourage you to use those moments to think about who's not in the room right now, who should be, and how do I get them in here? And how, the more places that we can apply that thinking, I think the better a society we're going to end up building. So I'll leave you all with that.
I love that point, Meg. I'll bring up the phrase that I love, which is do nothing about us without us. There are many organizations that are doing this work profiled in the book. I encourage you all to look at Letting Go and to follow up with Ben and Meg individually. And thank you for joining.
Thanks, everyone.